Alrighty, guys, what is going up? I hope it's working. I hope we are live here. Let me pull it up to make sure that we are good. Send it to the group chat here as fast as I can. All right, so we got to go to share. I'm doing this on my phone, so I'm trying because I don't want you guys to have a bad little experience here. So, all right, guys. So in today's little live stream, we're just going to be chatting about some of the stocks to keep on watch here. Let me pull up my list. I kind of wasn't 100% ready because normally I have a ton of technical difficulties. But all right. So we're going to be breaking down my top picks for next week here. So I hope you guys enjoy it, and obviously if you have any questions, go ahead and just ask them here in the little, messaging box, the comments here, and we can do some stock picks. We can do it all. So, all right, let's start off with the top stock here that I'm keeping on watch. Here is ticker symbol ALL. This is Allstate here. I'm looking for a break of $93 per share. I do think that we are coming in contact with some old support. So I do think we're going to get some buying pressure to at least $94 here. Just a nice little swing trade. I think that, yes, we're on a short-term downward trend, but the company is actually doing pretty well. Insurance in general over the past couple of months have become very undervalued. So honestly, even for holding it for 6 months, I think that this will definitely have a good ROI, but overall definitely one to keep on watch is all. Now, another one here that is one of my top short stocks is Cake. I do think that it is coming a little overvalued here. A lot of restaurants right now haven't really been able to open up, and Cheesecake Factory is just one that has been hit pretty hard here, but I do think we should start getting some sell-off back down to about $29. I think it's a little overextended. It is hitting some old resistance lines, so I think it's a matter of time before we do get some sell-off here. Obviously, with this one here, you could always set your stops at 32 to about 33, wait for the fall to 29. That would be my little game plan for this one. Really risking 1% to make about 3 to 4. So overall, that is still a good risk reward ratio. Moving on, here we have another top buy here. I want to talk about TGT is Target. I do think with everything going on, Target has been actually doing pretty well. With this whole holiday season coming up, I think it's really going to use this 90 moving average line as some support. You guys can see it did come in contact with it here, and now it's kind of consolidating here. So what I'm going to do is I'm going to take a little stab, set my stops right below these these candles here at around 858 to about 855. So really I'm going to be risking $2 to $5 to make 7 to 8. That's kind of my strategy for this one here. And I do think with this stock here, one, it's undervalued on the RSI. 2, with everything going on, Target has actually been doing very well. 3, holiday season coming up, people are going to be buying stuff from Target. I think that Target, Amazon, and Walmart are going to be doing very well. So getting back to another stock here that I want to talk about, where is it, is Netflix. Netflix has been falling lately because they did release their earnings report, and it did fall pretty hard. But let's go ahead and pull it up here. So you guys can see it was trading at $568, sold off to $488. Now I do think that this is just a undervalued stock. You guys can literally see that we are on some old support lines. Now, almost every time this stock falls below this 200 moving average line, it really kind of uses it as some resistance. So either a swing trade from 488 to 507, setting stops here at 480, risking $8 to make 20. If not, get a break of the 200, just like we've gotten all in here it could come back up to the nearest resistance would be at around 530 if we get a break of that. So that's another little strategy here that I want to look at. But if you guys have any questions, go ahead and ask them. Little strategy. Whoa, geez, I heard myself. But if you guys have any questions, go ahead and ask them in the group chat here. For some reason, it didn't send to the team. So let's just click. Okay. So, all right. So now that I resent out the link to the group chat, we might be able to get some more people coming in. But overall, guys, I think that there's a lot of very undervalued stocks, and especially with the holiday season coming up, we're going to have a lot of stocks here explode. But another stock I want to talk about here is GM. GM did announce their new Hummer, and honestly, I think it made the stock become a little overvalued. You guys can see we had this huge hype up to about $38. You know, one, the Hummers are starting out at $115,000. Two, they haven't even started production on it. It's only reservations. Three, it's going to be a long road. You know, GM was trying to work with Nikola Motors for their hydrogen-based vehicles and electric trucks. That really honestly didn't kind of pan out too good. But overall, guys, I think that GM could be a little overvalued. I think we should get some sell-off here to this old resistance at around 33. The reason why I say 33 is because that's this old resistance here. Now, as a technical trader, you always got to look at this old resistance becomes new support here. When it hits these overvalued territories, you guys can see we're starting to curl down. You guys can see with the last two candlesticks here, we're curling down. So if it doesn't fall all the way to here, I think it should fall to at least 35 to about $33. That would be kind of my game plan for that one here. But overall, there's just a ton of stocks to keep on watch. You know, if we pull up the market's been not doing too great. We've had some sell-off here. It is coming in contact with this 90 moving average line, which is kind of keeping it afloat here. So, you know, if we get a break of this 90 moving average line, I think that we could get a fall back down to the 200. If the 200 fails, then that's something to be worried about because the 200 could fail and it could fall back down to under $300. But, you know, it's just something to be a little worried about that we are still on this downward trend. You know, so honestly, there's more short opportunity right now in the market. So Intel, let's pull it up. Whoops, for some reason, guys, it's not letting me type. What's Intel's stock ticker? I can't remember. Intel, right here. Okay, so Intel did get severely slammed down. You guys can see it was trading at around $54. Fell all the way to 48. So there's a couple of things that could happen here. Just like in here, we had this major sell-off here, came down to nearly that $48 mark. So we could classify that as some hard support. So you guys can see it came in contact with it, buying pressure, and then we started just to get more buying pressure and major sell-off here. So now I think that we still have a short-term opportunity. Long-term play, I don't know. I don't know much about this, but I know when history tends to repeat itself, it does. So major sell-off, undervalued, buying pressure, sell-off, undervalued, buying pressure. You know, I think the market tends to overreact to news. So I think there could be a short-term opportunity with it falling 10%. But as a long-term, you know, I'm not sure where Intel will fall in the future. It's hard for me to say. You know, I understand that they are one of the greater companies out there, weighted by market cap, but you know, I'm not an investor in them, but that doesn't mean you can't make any money. I think that it is on some old support. We should get some buying pressure to at least this 9 moving average line, because you guys can see. All right, you see how close this stocks hug this blue line here? So when we get a major sell-off here, just like this, look how far away it is. So we're going to get some buying pressure to at least get to that line, just like it's happened in the past here. You guys can see almost any time that this stock has sold off, when it gets too far separated from these lines, it gets buying pressure to get back into them again. So it's just something, I'm not going to mess with it, but doesn't mean you can't make any money. But right now, the bond market really hasn't been doing too much. Normally, with the stock value going up, bonds tend to fall down, and it's only fallen, $2. So it's nothing to be too worried about here. I want to average in. If it falls back down to 80, I don't think it ever will. I should probably move it back up to at least like 85. I think that would be a fair buy for this. But honestly, bonds are a great way to, hold some defense in your portfolio here. I always keep telling you guys this, and as the market falls in price, bonds tend to do pretty well, and vice versa. As the market goes up, bonds tend to fall down a little bit. So obviously, with that, you just got to have a combo of both. That's kind of my little strategy here. I do hold about 10% in BND of my portfolio. Get a 3.5% dividend, so it's some good cash flow coming in. Another stock here that we can talk about is where is it? We talked about Netflix. I thought I looked it up. So we talked about Snapchat right here. All right, so we've had some crazy volatility with Snapchat here. Stock definitely exploded due to very good earnings. I did hold this from 28 all the way to 37. I thought it was still overvalued there, but it did explode back up to 44. I think it's a little overvalued now. You guys can see the separation between the moving average lines. So I'm not going to mess with it right now. I would like to see this stock fall back down to at least 36 because of that support there. 36 to about 35 is their support. But overall, this is definitely one that I kind of knew it was just a matter of time before it exploded. That's why I got in at $20 or $28 before their earnings. Definitely a high risk play because it could have went both ways, but I did not know. I definitely set my stops right below this 90 moving average line and just went with it. But I do think that we should get some short-term sell-off here to about $38 to $35. That's kind of my little strategy here. I'm going to go ahead and set a quick alert just so I know it. But if you guys have any questions or any stocks you guys want me to look at, let me know. Just go ahead and ask them in there. But overall, crazy week in the market. We can talk about one of the top stocks that I plan on buying this month is Home Depot. I'm a huge believer in it. It is coming in contact with this 200 moving average line. So the 200 moving average line has a tendency to act as support, resistance, and overall a trend indicator. So you can look at it and instantly know what direction the stock's going. So you guys can see we did get some sell off here and then buying pressure coming in contact. Came in contact with it again, so I think we're going to get some buying pressure from at least 280 up to about 292. That's kind of my little strategy here. Basic support, basic resistance, setting stops here right below it at around 276. But this is one of the top stocks for this month to buy. Looking at it in the RSI, it did fall to a low of 38. Right now it's still at 46, which is a little undervalued still if you ask me. I think Home Depot is a great stock for the long term. You get dividend payments. You get pretty much growth. It's a mixture of everything. But so that is it, though. I'm going to go ahead and end it. I know Saturday streams in midday aren't the best here. I got to start doing them, in the week here, and we can actually go ahead and talk about stocks that are moving that next day or that day. So if you guys want me to go ahead and do that. All right, I'll wait. What stock do you want to look at? All right, that's just boom. All right. So let's talk about right here. Lockheed Martin. Okay, Lockheed Martin. This is one that I don't own any. I'll get that out there. But if Trump wins the presidential election, this is definitely one to keep an eye on. Now, with Trump in office, Lockheed Martin has done extremely well because of the overall supply that he's been using this company for the military. Now, if Joe Biden wins, there's going to be more of a short opportunity, because we all know, I'm not trying to get political. This is just basic, knowledge of when Trump was in office, there was more military spending. And if Joe Biden gets in office, he's going to be cutting a lot of the military spending. So I think it's something to be a little worried about. If I were you, if you guys are already investing in this, it's fine. Lockheed Martin's a long, reliable company. You guys can see you get $2.40 dividend payments, great cash flow, great growth. But right now, basic resistance 418, strong support here at 375 to 366, major support here at 340. So for me to be even interested in this stock here, I would like a fall to at least 340. But if Trump wins presidential election, this stock could go back up to 442. It's just a matter of time here. And I do think that this stock is going to be around for a long time. With both presidents, I just think it's going to fall and have a little sluggish moves for the first couple of months if Biden gets in office. But there's still money to be made both sides. The best strategy, what I would recommend for this one, because you guys can see it's pretty volatile. Up, down, kind of just consolidating here. One, you can try to mark out the supports and just get in on the supports. So even at 374 here would still be a decent buy. It's on some old support lines, so that would be a good support. Or you can just do dollar cost averaging. If let's say you have $1,000 to invest in this company, go ahead and invest $100 a week for the next 10 weeks. Get a good overall average price. Get some dividends coming in compounded. You can definitely make a ton of money doing that. But understand resistance here at around $400, basic resistance. That's going to be very strong because, whole dollars, so like hundreds and fifties, tend to act as very strong supports and resistance. But some supports here at definitely, that 374 here. All right, let's go ahead and look at another one here. We have ETTX. All right, so let's go ahead. Right now, looking at the stock here, you guys can see that we are on a downward trend. I would like to see how the 3-year chart looks. Okay, so when did this company IPO? Let me go ahead and do max available week and see what we got. Okay, so the company IPO'd 3 years ago. Just by looking at this chart here, you guys can see that we are on a downward trend, which is not a good it's not a good thing, but basic support. Let's go ahead and change this to the 180 day, just like this. Okay, so we got that major sell-off here, which is not very good. Major support here at around 225. So right now, with it being undervalued on the RSI, there's definitely maybe a short-term potential for a break of almost to $2. But this one I would stay away from. I just think that with the downward trend, with the whole market being the way it is, I'm not going to mess with it. But there definitely still could be a short-term potential. I don't think there's really too much long-term potential, but maybe. I could be completely wrong with this one, but I would stay away from it. You guys can see it's clearly losing market share, market momentum. And I bet you the finances aren't as good. Maybe we should get a fundamental chart or fundamental, balance sheets up. I wonder if there is a way that I could make some money. But that was a short. Okay, yeah, definitely more of a short opportunity for sure on this one. But definitely not a long. Definitely short opportunity. For sure, for the long term. Definitely agree with that. All right, let's go ahead and pull up another one. All right, so we have A, B, B, V right here. All right, so this one here is one of the better stocks here. The reason why I do actually like this one is because of the dividend cash flow and Let's go ahead and look at the 3-year chart. So the 3-year chart doesn't look too good. You guys can see that the stock has lost a lot of steam. Major support at $64, really kind of trading in between 62 and 97 to about $100. Right now it is coming in contact with this 200 moving average line, which definitely the stock could be using it as some overall support here. So what I would do is I would honestly, I would hop into this. The reason why I say that is because I really think this is going to be a good swing trade from at least 83 to about 90. The reason why I say 90 is because that is that 20 moving average line. So you guys can see that it kind of uses it as some resistance. Boom, boom. But honestly, definitely one to keep an eye on. I understand the dividend yields are probably crazy with this one. I think I do own some of this, but not much, maybe about 1%, if that, of my portfolio. But the reason why people like this one is because of the dividend yield. One thing to understand is you should never chase dividend yields by itself. You should always invest in a high quality stock over a stock that pays, 5, 6, 7% yield, because one, the growth on the stock that pays a 1 to 2% yield is a lot larger than a stock that pays a 5 to 7% yield. So like AT&T, I haven't touched, but this one here, I think there could possibly be a swing trade from here, from this real, if you look, from 92 to about 84. But if we get a break of the 200 moving average line, I think we probably will get a fall back down to 84. So just something to be a little worried about. Definitely downward trend in stock price, maybe a swing trade opportunity. Yields are very large on the stock. But yeah, that's kind of my mindset. And the thing is I think I do own a little bit of this just for that cash flow of the dividends. But so ExxonMobil, I have not messed with. Same thing. I did take a swing trade on it a while back. But look at, you guys can see the chart. I always like to, think of where is this company going to be in 10 years? If it's going to grow, then honestly I'll invest. If I don't think it will, then I won't. And I don't think this company is going to be growing. I think this company is burning through a lot of cash right now. Their finances, their fundamentals aren't that good. Their long-term debt is increasing. And before the whole recession or the pandemic hit, the stock was still in a downward trend. So, for every dollar you invested, you were losing money before the recession. And I'm sure you guys know electric vehicles is growing at a very, very rapid rate. And so I do think that's where the money is. I think that's where the long-term potential is. And I understand that they do pay a dividend, but with that dividend yield increasing, the stock gets more risky. So right now, same with this one, I'm not going to be too interested in it, but there could be definitely short because, or not short, long or a swing trade. I can't even talk, but because you can see it is coming in contact with some old support here. So if it does get some buying pressure in here, we could definitely come in contact with about $44 again. Set your stops here at around $30 and then just roll with it, honestly, if you're a believer in it. But I would rather Costco. Costco's a great stock, okay? I don't care what people say. Costco, look at this. Beautiful growth here. You have some dividend payments, so you're getting cash flow. Costco in the past has done a special dividend where they pay $7 per share, which is crazy. But Costco has a ton of cash. They treated their employees very well. Every employee during the recession got a $3 bonus. One thing is happy employees equals more profits. It honestly does. If you look at all the top companies to work at in the United States, most of those companies are going to be some of the best companies to invest in because the employees show up ready to work. And when you have happy employees, you make more money. It's very simple. So Costco is definitely a great stock to invest in for the long term. You guys can see the beautiful growth. This stock has outperformed all the major indexes. The best strategy for this, honestly, there's multiple strategies you can use. I always like to use dollar cost averaging for all of my long term, so I get a good overall average price. But something like this, where the growth is very large, I would just go with it. All right, so let's look at LCA. Whoops. Oh, for some reason okay. So LCA here, you bought 100 shares at 14.58. Would you sell half to minimize the risk? All right, so you're already down about $2 per share. Right now the overall, what is this company? All right, so right now you guys can see there is some support here at the 90 moving average line. I can see that you got in probably right around this 90 moving average line, hoping it would use it as some support, probably come back up to those highs. That's where I see that you were investing in it. So if you're doing this for a swing trade, you always got to set your stops. Okay, so I would have set my stops right below this 200 moving average, or right below this 90 moving average line at around $13.50, $13. So right now, I don't know if I think it would probably be the best bet to cut some of your losses, yes, to minimize that risk. But if you're holding this for the long term, that's up to you. You know, it all depends on your emotion. Right now, do you think this company could come back up to $19? Me personally, I think it's going to take a long time, and it's going to take a ton of buying pressure. You guys can see that we are losing volume. Okay, so we're going to have to get more volume spikes in here. So right now, I would definitely start cutting some of your losses and hoping that it does find some support here at around $11. And if it comes back up to 19, you can make some of your money back. Let's go ahead and look at DTEA. All right, downward trend here. I'm not a huge fan of this one right now. Let me pull up here the max available time. All right, so this one here, honestly, I must have heard it. I must have heard of it somewhere because I do have a trend line here. But I don't invest in this one. They're in huge. You know, honestly, I would like for me to invest, guys. I want confirmation, so I would at least need a break of one of these moving average lines for me to invest in this. The reason why I say that is because right now the trend's down. This company's burning through money, going down in price. So I never invest with a downward trend. I honestly don't. I want to make sure the company's growing, it's healthy, and you guys can see it's very, very lightly traded. You can see a ton of volume spikes all the way back in the day, but nothing now. I would stay away from it, but if you're interested in that, then go with it. All right, Carvana. Let's go ahead and pull it up. I'm not sure what the stock ticker is. I thought it was cars. Right here. All right, so Carvana here is honestly, it's a pretty cool company. Now the company is almost like a Amazon for cars. It's a really cool thing here. Company's growing at a rapid rate. They are getting a lot of awesome investors involved. And the thing about this is I think there's growth potential here. The company I know is expanding. They do have a little long-term debt. Long-term debt's fine to grow a company, but you guys can see it does like to use this 200 moving average line as some support. So it comes in contact with it multiple times. You can see it comes in almost in contact with it here, came in contact with it here, curled up, extreme buying pressure. Honestly, this would be a growth stock for sure. The trend is in our direction. We have a some sort of future in this industry. I think that e-commerce is going to grow at around, I think it was 12 to 14%. Not as good as data. Data is growing at around 17 to 22%, but this is still a great company to invest in. Definitely a little more risk than, Apple or Microsoft, but definitely one to at least take a stab at, honestly, for a growth stock. Make it under 1 to 2% of your portfolio. So if it explodes up, it outweighs that little percentage. All right, another one here is IBIO. IBIO. All right, here. So you guys can see that we had the past year really didn't move a whole lot. Honestly, lost a little bit of steam from about $1 all the way to almost 5 cents. Got some absolute explosion. All right, got some explosion here from 31 cents all the way to about 35. You guys can see this major sell-off here. Found some support at this 20 moving average line, and then has just slowly been increasing. Probably some sort of fundamental catalyst here to make the stock go up quite a bit. Let's see if we can. So it's just saying, okay, so this is going to be a COVID-19 vaccine candidate. Okay, so now that we know this catalyst here, I think that there's short-term potential with this. If this company, I believe this might be one of the companies that's working with. Let me see if we can find it. I want to say it's this, but I can't find it. But anyways, one of these companies is working with Matt. All right, so one of these companies is working with Gilead Sciences to develop a vaccine. If that happens, I definitely think that we could get a absolute explosion in buying pressure, because there's going to be almost guaranteed revenue. The growth's going to be large, and everybody's going to want to invest in the company that came out with the COVID vaccine. So if this is the company, there's definitely a high ROI, but there's also a lot of risk, because I know right now there's a lot of competitors in that field of working on the vaccine. I know we have Johnson & Johnson working on it. We have Gilead. We have Medana, or I believe that's how you say it. But we have a lot of companies trying to figure something out. And if this is the one that has that cure, has that vaccine, it's gonna go almost parabolic. All right, Workhorse here. I think we covered this last week, but we can pull it back up. I don't mind. All right, Workhorse. You guys can see that we've had some beautiful explosion in buying pressure, selling off here a little bit. So there's going to be some support here at around 1460. And then there's going to be some more resistance here. But that it looks like it broke through that old resistance as support. So I think the next real support should be at around $18. Right now, it's kind of in that middle ground of should you buy it, should you not. I'm going to stay away from it. But this is definitely one of those growth stocks, very similar to Carvana. Definitely high risk, high reward play. You know, if this stock works out, definitely could go up to $45, $50 by mid next year. I'm just going to be staying away from it right now for it to be I can't even talk. But I'm waiting for a better opportunity in the stock price. I don't know why I said that so weird. I have no idea. I was trying to explain it. I don't know. But really, I'm going to wait for a fall to about $14.50. If we get into it, $14.50 to about $18.50. What do I think about financial stocks? I know a lot of companies right now, a lot of bank stocks have honestly been doing pretty decent. I know with the interest rates being low, they've been able to get more loans out and make some money here. But I think they're still a good buy. This recession wasn't in 2008 we had the housing crisis. I think the real estate market, all of that stuff has been actually going up in value. We had little to no fall in homes. So I think there's still potential there with almost all of the financial stocks. A lot of them have a ton of cash, are honestly doing pretty good. Where do I see Walmart being by the end of 2020? All right, so let's just pull it up here. Walmart. Whoops, right here. Okay, so Walmart here did announce their new Walmart Plus service, which I'm sure you guys know is one of the larger competitors with Amazon right now. So with that being said, I do think they're going to have a great holiday season. I could definitely see this stock coming in contact with 160 by 2020. But yeah, so that is it though. If you guys have any questions, go ahead and ask them. I don't know how long I've been streaming. I'm not sure. But I hope you guys enjoyed it. And if you guys got anything in value, it really means a lot when you guys hit that like button. You guys have no idea how much it means to me. But yeah, so we'll see you guys. If you're looking at a weekly or daily swings, especially given market volatility under $10 range. Really what I look for is you can go to, like, what I'll do is to find stocks under the $10 range is I will go to like Finvez, and I will make sure the stock has, because Finvez is a stock screener. It's free. So you can literally put in the price you want to pay. So if you wanted to go under $10, you can make sure the stock has an upward trend, go to the channel, make sure it's up, and make sure the price to earnings is pretty low. You don't want to be investing in a company that is too overvalued. So that's honestly what I do when I look for stocks under $10. But if you're looking at daily or weekly swings, what do you look for? I mostly look for support, trends, moving average lines, and my RSI. But that's really how I find stocks under the $10 range. In any range, because there's a ton of free stock scanners out there that people don't use. But all right, guys, so I hope you guys enjoyed the live stream. I'm going to be trying to do these maybe once, twice a week. So we'll see you guys tomorrow in another episode or another video or another podcast. I think I have a podcast coming up later today, and then another video early tomorrow. So we'll see you guys tomorrow. Remember to stay happy, stay positive, and overall stay safe out there. We'll see you guys tomorrow.